Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome back to the channel, Dad's Market Stats. In today's video, we have a lot to talk about. We're going to talk about this Blackberry $2.50 put that I sold last week. As you can see here, it lost a lot of its value. So I'll let you know what my plan is with this put, with regards to this put. We're also going to talk about their earnings report that they had yesterday. We're going to take a look at what their report says for their future guidance. So we'll see what happens going forward. And finally, we're going to discuss the news about Riot platforms and Bitfarms, the recent news that they had. We're going to see how where they stand now with regards to the poison pill and the hostile takeover attempt from Riot. So let's get into it right now. Let's first of all talk about this Blackberry put. As we can see here, it's expiring on Friday, June 28th, right? So let's take a look at this option here. We can see here when I sold this option, I was able to sell it for 28 cents for 100 shares, which gave me $28 credit into my account. So right now it's currently trading at 6 cents times 100, which is $6, right? As you can see here, that's what's left over for me to make from this option here. But if we take a look at Blackberry right now, the Blackberry stock here. Okay, we take a look at it here. We see that it's trading at the strike price right now. It's right at the strike price of $2.50. So if this contract expires tomorrow at $2.50, then I'll be owning another 100 shares. Well, actually, my first 100 shares of Blackberry stock, which I am buying for $250, right, for 100 shares. But I already made $28 on it. So I collected my profit up front. I have $28 that I made already off of this company, Blackberry, from selling this option. Okay. So it could go either way, right? Tomorrow, I think there's some news coming out tomorrow on Core PCE. It could go either way. Blackberry could continue to go up tomorrow, or it could come back down to below $2.50. So if it stays below $2.50, then I'll be able to be assigned 100 shares of Blackberry for that price. However, if it goes above $2.50 tomorrow, then I'll receive back the $250 here that I have in collateral. Okay, see, I have $250 in collateral. I'll receive that money back if I'm not able to buy shares of Blackberry at $2.50, because if the price ends above $2.50 on Friday, tomorrow, then I will not be able to buy them, right? Because the price is trading above $2.50. So I'll receive my $250 back from collateral. Okay, so this brings me to my next point, ladies and gentlemen. I'm not going to be selling any more options this month. So this is the last options that I'm going to be looking at this month. So you see this money that I have here in my buying power. This is what's left over of the passive income that I've made for the months of May and June. Okay, so this plus the $250 collateral that I have on my Blackberry option right now adds up to a total of $684 of passive income that I made in the months of May and June. Actually, I believe it was $686 that I've made in those 2 months in total. But of course, that's minus the transaction fees from all of the options that I was able to sell in those 2 months. So I'm going to go ahead and collect this passive income right now. And it's a good thing that I was able to take the day off of work today. Okay, so that way you can see how I collect this money. I'm able to deposit this money right back into my checking account. So I'm going to do that for you right now. Let's go ahead and take a look at how I'm able to deposit this money back into my checking account. So let me put this order in, and that way you'll be able to see how I collect this money. Okay, so I'm putting in the transfer right now, and as you can see, now my buying power is at $0, right? So next month, July, next week, is going to be on Monday, the 1st of July. That's going to be a new month. So I'm going to start fresh with my buying power, right? At $0. Right. However, with this option, this BlackBerry option, if I am not able to buy the 100 shares, I'll have the $250 back in my buying power. I'm going to deposit that money also back into my checking account so that I can start the month of July fresh with $0 in my buying power. So that way you can see that all of the options that I sell in July is going to show up here in my buying power. All of the passive income that I make in July is going to be showing up here in my buying power. Okay. So now let's talk about why BlackBerry was able to rise to $2.50 since the earnings report. Let's take a look at how the numbers were. Okay. So as we can see here, BlackBerry non-GAAP EPS of -3 cents. So they lost 3 cents per share in line, right? They actually beat EPS here because it was estimated to lose 4 cents per share. So they beat on earnings per share and they also beat on revenue. See, revenue of 145 million beats by 9.95 million. So as we can see, they were estimated to only make revenue in the amount of $134 million or so. Let's take a look at more of these highlights here. Let's see. Um, as we can see here, they were able to make revenue on their Internet of Things. That's one of their, the way that they make revenue. I believe that's the AI play that they have. But we also see that they have other ways of making revenue. For example, there's cybersecurity here. BlackBerry is well known for cybersecurity, and they were able to make revenue here as well. All right. And finally, they have their licensing and other forms of revenue, which added up to $6 million. So they have plenty of ways of making revenue. They're still not profitable though at the moment because of their expenses, right? They spend a lot of money. Their cost is a lot of money that they spent on these things, right? If you want to listen to a replay of the earnings call and go into further detail on the earnings report, I'm going to recommend that you watch this channel here, Wealthy Mindset. All right, this individual here, this YouTube channel here, he makes a lot of great videos. If you want to learn about technical analysis, how to read technical analysis charts, if you're at home, you're not working like me all day, busy all day. If you're at home and you're able to look at the stock market during the day, you might want to learn how to read the technical analysis charts so that way you can make money every day trading options, okay? Or trading stocks every day just by learning how to read the technical analysis chart. So I recommend this channel here. This YouTube channel is excellent when it comes to reading the technical analysis of BlackBerry. And he also reads technical analysis for indexes like SPY and QQQ and other indexes, okay? So very excellent channel to take a look at, okay? I'm going to post a link to the earnings conference call playback at the end of my video on one of the windows. Okay, so I do highly recommend you viewing this channel if you have the time. But let's go back to now the news that came out on Riot and Bitfarms regarding the poison pill and also the hostile takeover attempt from Riot platforms. Okay, so look at this news that this press release that Riot put out on this issue. Here they said Riot requisitions special meeting of Bitfarms shareholders and nominates 3 highly qualified independent directors to bring urgently needed change to Bitfarms board. New independent directors are necessary to fix Bitfarms' broken corporate governance and to oversee a fair strategic alternative process. Riot urges the Bitfarms board to ensure shareholders are heard by holding the special meeting without delay. Riot withdraws previous proposal to acquire Bitfarms for US $2.30 per share. They stand ready to engage with reconstituted Bitfarms board regarding a potential transaction. So also on this press release, we can see here on this highlighted section, Riot currently owns approximately 14.9% of Bitfarms, making it Bitfarms' largest shareholder. All right. So as we can see here, Riot is now at the brink of triggering the poison pill or shareholders' rights agreement. Okay, remember, if they go above 15% ownership, then they will trigger the shareholders' rights agreement or poison pill, as is more commonly known. And more shares will be issued into the market and distributed amongst the other shareholders, diluting the amount of percentage that Riot owns of Bitfarms at the moment. Okay. But let's take a look at what else they talked about in this press release. Another interesting point here I want you to take note of. Bitfarms board has been unwilling to engage constructively with Riot. Following approximately 13 months of attempting to meaningfully engage with Bitfarms regarding a potential combination of Bitfarms and Riot, Riot delivered a private acquisition proposal to the Bitfarms board on April 22nd, 2024. After providing no constructive response despite repeated follow-up by Riot, the Bitfarms board demanded that Riot sign a confidentiality agreement that included an excessive and off-market standstill of more than 3 years, and soon after advised that the offer was too low, without any guidance as to what terms it would consider acceptable or any other commentary. So as we can see here, Riot wants to know at what price Bitfarms would be willing to sell the company, right? And Bitfarms has not provided that information for Riot because, of course, Bitfarms says that that offer was way low, very low, and Riot is complaining that they gave no guidance as to what terms would be acceptable to them. But as we can see, this has been going on for 13 months. So we're going to take a look at what Bitfarms shares were trading at 13 months ago, which we're currently in June of 2024. So that would bring us to May of 2023. So we're going to see at what price Bitfarms was trading at that time, and see how much of a difference it is from what Riot offered to buy them out at. Okay, let's keep looking further on into this press release. And here we go. It says here what the next steps are. Riot continues to believe that a combination of Bitfarms and Riot will create the premier and largest publicly listed Bitcoin miner globally, with geographically diversified operations well positioned for long-term growth. Riot remains completely committed to pursuing a transaction with Bitfarms. However, it is clear that engaging with the incumbent Bitfarms board on a potential combination is just not possible. As a result, Riot has informed the Bitfarms board that it has formally withdrawn its previous proposal to acquire all Bitfarms common shares at a price of $2.30 per share, and stands ready to engage and negotiate with the reconstituted Bitfarms board to pursue a mutually beneficial combination of Bitfarms and Riot. So, as we can see here in this portion of the press release, Riot has withdrawn their offer and will need to make a new offer if they still intend to buy out Bitfarms. So let's go ahead and take a look at now what Bitfarms was trading at back in May 2023, and we'll see how much of a premium Riot was willing to pay at that time. So let's go ahead and take a look 5 years back in May of 2023. As we can see here from this chart, they were trading at about $1.13, right? So for the month of May, they was even below $1, right? At some point. So they were trading at around $1 in May of 2023 when Riot made that offer to buy out Bitfarms for $2.30. So they were willing to pay a premium of above, more than double of what Bitfarms was worth at that time, right? Bitfarms shares were worth $1. They were willing to pay more than double of what it was worth at that time, $2.30, right? If we could take a look at now what Bitfarms is trading at right now, it's trading at $2.61. So if Riot is still willing to pay more than double of what it offered Bitfarms at that time, then that means that they would have to be offering at least $5 per share, right? Because that would be double of what Bitfarms is worth right now. And I just don't believe that that is really worth it for Riot to buy out Bitfarms for a premium of $5 per share, okay? That might not be beneficial for Riot at all at this moment. So they might not make another offer, okay? They might just stay to owning less than 15% of Bitfarms shares for right now. Okay, so let's take a look at how Bitfarms responded now. As we can see here in Bitfarms press release, it says Bitfarms receives shareholder meeting requisition. Okay, reiterates commitment to strategic alternative review process to maximize shareholder value. No shareholder action is required at this time. So this press release was very brief. They let us know that we don't need to take any action at the moment. Let's see how they end this statement here. The company remains committed to constructive engagement with all shareholders and will review the requisition and provide an update in due course. Bitfarms shareholders are not required to take action at this time. So as we can see here, ladies and gentlemen, Bitfarms still holds the ball in their court. So even if Riot does manage to take over the board of directors, you can see they're trying to put 3 people into the board of directors and remove 2 of Bitfarms board of directors, right? So that would give them the majority of those who are in the board of directors and make it easier to acquire Bitfarms if they are able to do that. However, the ball is still in Bitfarms' court, right? Even if Riot is able to gain the majority of people that they have inside the board of directors of Bitfarms, right? They still have a play left that they can make. Bitfarms still has not announced who the new CEO will be. Could Bitfarms be waiting for the right moment to name their chief mining officer, Ben Gagnon, as the new chief executive officer and send the stock price soaring? Because that is what will happen, right? If Bitfarms names their chief mining officer, Ben Gagnon, as the new CEO, that would send Bitfarms shares to above, I believe it's going to send it to above $4, right? $4 or more. So even if Riot Platforms manages to win the board of directors of Bitfarms, right? If Bitfarms announces Ben Gagnon as their new CEO, that is going to send the stock flying. It's going to be trading above $4. At that point, Riot would have to pay $8 or more of Bitfarms shares in order to acquire Bitfarms, and that would just simply not be worth it for them anymore at that moment. But as we can see, Riot wants Bitfarms. They want to buy Bitfarms. Why are they so insistent on wanting to buy out Bitfarms? Well, because they want to be a geographically diversified, as we can see here on the press release, geographically diversified company, just like Bitfarms is at the moment, because Bitfarms has operations, as we know, in Canada, which is where they're headquartered at. They have operations in the US, right? They just acquired a new building in Pennsylvania, New Jersey, and Maryland section, right? So they have operations in the US, they have operations in Argentina, and they have operations in there's another South American company I can't remember at the moment. I believe it's Paraguay. But yes, they have operations in 2 South American countries, the US and Canada. So they are very well geographically diversified at the moment. Riot, however, only has operations, if I remember correctly, in Texas. Okay, so they are not geographically diversified right now. They want to be, and that is why they're looking at buying Bitfarms. Okay, they want to be geographically diversified, because if something happens in Texas, ladies and gentlemen, Riot is going to not be able to operate at that time. Like, for example, let's say the power goes out in Texas, right? Because of all of the heat that they experience, all of the air conditioning that's operating at that time, that could cut out the power for the whole state of Texas, right? Or there could be a storm in Texas that would take out their farms over there in Texas that they have, right? That is the only way that Riot is able to operate at the moment. So that would completely stop them from being able to mine Bitcoin. So that is why Riot needs to be geographically diversified, and that is why they want to buy out Bitfarms, okay? So Riot, once again, they need Bitfarms in order to grow, but Bitfarms is already positioned well in the market. They do not need Riot platforms in order to continue to grow and execute on their business plans going forward. So this saga continues. It looks like Bitfarms still has the ball in their court. They're going to decide whether they will accept uh, Riot's meeting of shareholders, right? Special meeting of Bitfarms shareholders, okay? And nominates 3 highly qualified independent directors, okay? So make no mistake, these are not independent directors that Riot is nominating. They are going to be for Riot platforms, okay? Because how do we know that? Because all of them, as you can see here, who they're nominating: John Delaney, Amy Friedman, Ralph Goring. These are all people who are they have experience when it comes to mergers and acquisitions. Okay, if you take a look at this press release from Riot Platforms website, you'll see that they all have experience in mergers and acquisitions. So they will try to buy out Bitfarms if they get on the board. Okay, so that is what is going on in that saga. So this is the video, ladies and gentlemen. I hope that you were able to benefit from it. I hope that you are continuing to see and benefit from using the wheel strategy. See how you can use the wheel strategy in order to save money every month, every week, and still make interest on that money that you put into the stock market, and be able to use that money when you need it for emergencies, right? Because that is what I do, ladies and gentlemen. As you can see, I invest money into the stock market, but I also get interest on the money that I'm letting the stock market hold from me, right? I make money so that way I can use that money in case of an emergency, okay? As you can see today, ladies and gentlemen, I showed you I withdrew the passive income that I made for the last 2 months, minus the $250 that I currently have being held in collateral in this Blackberry put option. So once I get this $250 back from collateral, or if I get it back from collateral, because I don't know yet, right? If I'm going to get it back, right? If Blackberry stays below $2.50 on Friday, which is tomorrow, as we can see, it's still coming down at the moment, $2.43. It looks like I'll be buying 100 shares of Blackberry stock for $250, okay? But remember, I got paid $28, right? I got paid $28, as you can see right here, okay? Let me show you my history here. Okay, I got paid $28, okay, for this contract. So that means that if I do end up buying the 100 shares for $250, but I already collected $28 of that money, that means that I'm really buying them for $222, okay? And then I will be able to sell a covered call contract in the month of July. And I will show you how I sell those covered calls, and in order that I can continue to make interest on those $250, okay? Until I'm able to make a capital gains from those $250. Okay, ladies and gentlemen, let me know if you have any questions in the comments below. If you're following me on Instagram or Facebook, you can send me a direct message there as well. Any questions that you have, ladies and gentlemen, I will address them on a future video, so that way you can continue to learn how to invest in the stock market and see how this could benefit you in the long run. Okay, ladies and gentlemen, well, that's the video for today. I hope that you have a great weekend. And as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.